Hello and welcome to Rise and Thrive Network. If you're new here, make sure to subscribe and hit the notification bell for insights on finance, productivity, and personal growth. Today, we're talking about a powerful tool that can help you build wealth over time, investing. In this video, I'll guide you through investing for beginners, covering everything from why you should start investing to actionable steps to get you started. Whether you're aiming for long-term security or financial freedom, investing is key. So let's dive in. First, let's cover why investing is so important. When you invest, you're putting your money to work. Instead of just saving it, which is a great start, you're allowing your money to grow. Investing can help you. 1. Beat inflation. By earning returns, you can protect your money's value over time. 2. Build wealth. Compounding returns can grow your money significantly over years. 3. Achieve financial goals. Whether it's retirement, buying a house, or financial independence, investing helps you reach those goals. So investing isn't just about making money. It's about securing your future, taking control of your finances, and giving yourself options. Now that we know why investing is essential, let's look at some common types of investments you might consider as a beginner. 1. Stocks. When you buy a stock, you own a piece of a company. Stocks have higher potential returns but come with greater risk. 2. Bonds. Bonds are loans you give to companies or governments. They're generally safer than stocks but offer lower returns. 3. ETFs, exchange-traded funds. ETFs are like a basket of stocks or bonds that you can buy as a single share. They're diversified, which helps reduce risk. 4. Mutual funds. Similar to ETFs, mutual funds pool money from investors to buy a mix of assets. They're actively managed but can have higher fees. 5. Real estate. Investing in real estate is another way to diversify and grow wealth, either through property rentals or real estate investment trusts, REITs. Each type of investment has its pros and cons, so it's important to understand what aligns best with your goals and risk tolerance. Next, let's go over how to create a simple investment plan. Here are 3 steps to get started. 1. Set your goals. Are you investing for retirement, buying a home, or just looking to grow your wealth? Clear goals help shape your strategy and time horizon. 2. Determine your risk tolerance. Ask yourself, how much risk can I handle? Younger investors may have higher risk tolerance, while someone close to retirement might be more conservative. 3. Choose your investment accounts. For beginners, a brokerage account is often the simplest way to start investing in stocks, ETFs, or bonds. For retirement-focused investing, consider opening a 401k or IRA for tax advantages. Part 4. How to start investing. Once you have your plan, it's time to start. Here's a simple approach to begin your investing journey. First, open an account. Choose a brokerage that suits your needs. Popular options for beginners include platforms like Robinhood, Fidelity, or Vanguard. Many offer low fees and tools to help you learn. Next, start small. If you're new, there's no need to dive in with large sums of money. Start with what you can afford, even if it's just $50 or $100 a month. Small, consistent contributions can add up over time. Then, focus on low-cost index funds. Index funds are diversified and often have lower fees than actively managed funds. They're a great choice for beginners because they give exposure to a wide range of stocks or bonds. Finally, automate your investments. Many brokerages let you automate contributions. Setting up automatic monthly investments can make investing easy and consistent without needing to think about it. Part 5. Key investing principles for beginners. As you start investing, remember these principles to stay on track. First, think long-term. Investing isn't about getting rich quick. The stock market fluctuates, but historically it's gone up over time. Stay patient and avoid reacting to short-term changes. Next, diversify your portfolio. Spread your investments across different assets like stocks, bonds, and real estate. Diversification can help protect you from significant losses if one type of investment declines. Also, don't try to time the market. Trying to buy low and sell high sounds appealing, but it's incredibly difficult. Focus on steady contributions rather than perfect timing. And lastly, keep learning. Finally, investing is a journey. Continue to educate yourself, follow market news, and adjust your strategy as you go. Personal story or example. I remember when I first started investing, it felt overwhelming, but I began with small steps, focused on index funds, and followed a consistent plan. Over time, my investments grew, and it taught me that anyone can build wealth if they're committed and patient. Outro. Thanks for watching. I hope this guide helps you take your first steps toward investing with confidence. Remember, the sooner you start, the better your chances to build wealth and secure your financial future. If you found this video helpful, please hit the like button, share it with others, and don't forget to subscribe to Rise and Thrive Network for more personal finance tips. And if you have questions or your own investing tips, drop them in the comments below. Let's grow and thrive together. And thrive.